The crypto market is at a crossroads. Bitcoin has fallen to levels not seen since November, and those post-election gains, looking pretty weak. We wanted alt season, but we got altcoin Armageddon instead. Meanwhile, macroeconomic uncertainty is shaking the markets, making it a confusing time for investors. To make sense of where we stand, we need to look back at how we got here. Today we break down a new report that does exactly that, analyzing trends in crypto's capital flows, derivatives growth, retail behavior, and of course, memes. I'm Nick, and if you want to stay on top of the markets, this is a video you can't afford to miss. Today's report is a collaboration between the centralized exchange Gemini, founded by the Winklevoss twins, and Glassnode, a leading on-chain analytics provider. Unlike many reports that focus on short-term market movements, this one covers a longer horizon, helping us see the bigger picture. The report starts with a look at the cycle low of 2022, a brutal bear market where BTC dropped below $16,000, ETH hit $1,100, and SOL fell under $10. If you bought and held since then, congratulations, you have nerves of steel. From January 2023 to January 2025, BTC's realized cap grew 121%, ETH's 45%, and SOL's a staggering 295%. This shows just how far crypto has come. But as always, the further we get from the last bear market, the closer we are to the next one. Realized cap isn't something you hear about every day, but it's different from market cap. Market cap is price multiplied by supply, whereas realized cap is the actual money invested in an asset based on when each coin last moved. It's a useful metric for understanding capital inflows into crypto. Looking at these numbers, we can see that while BTC remains the dominant asset, Solana's explosive growth signals a shift in how capital is flowing in the market. This also suggests that new investors are favoring high-risk, high-reward assets over more traditional crypto investments. However, while these trends are exciting, history has shown us that bull markets don't last forever. As much as the numbers might look promising, a cautious approach is always wise when navigating volatile market cycles. If there's one standout trend in this cycle, it's meme coins, and no blockchain has benefited more than Solana. Fast transactions, low fees, and easy-to-use tools made Solana the go-to blockchain for meme coin speculation. Daily active addresses on Solana skyrocketed past Ethereum and even Bitcoin. By January 2025, Solana was settling $37 billion in daily transactions, more than Ethereum and Bitcoin combined. Meme coin trading dominated, with Solana-based tokens like Bonk and WIF surging over 477%, outpacing Ethereum's top memes by a wide margin. This phenomenon highlights the unique appeal of Solana's ecosystem. Its low fees and rapid transactions make it the perfect playground for retail traders and speculators who thrive in volatile markets. While Ethereum remains the dominant smart contract blockchain, Solana's infrastructure has evolved to cater to traders who prioritize speed and efficiency over decentralization and security. Solana's rise also indicates that retail traders are looking for alternative ways to maximize their gains. With Ethereum fees remaining high, Solana provides an attractive option for those seeking cost-effective trading opportunities. However, this influx of speculative trading raises concerns. Can Solana sustain this level of activity, or will it eventually suffer from the same market fatigue that often follows speculative booms? Additionally, Solana's reliance on meme coins could make it vulnerable to sudden liquidity shocks. If meme coin trading slows down, it could significantly impact Solana's overall transaction volume and market standing. Looking forward, Solana's ability to retain users and expand beyond meme coins will determine whether it remains a major player in the crypto ecosystem or fades into a niche market. Another factor to consider is regulatory pressure. With Solana attracting significant attention, regulators may impose new policies that could impact its long-term growth. Derivatives trading hit new highs in 2024, with futures trading volumes across BTC, ETH, and SOL reaching $120 billion in a single day. This surge in leverage has amplified price movements, making liquidation events more extreme. Open interest in Bitcoin futures grew by 216%, Ethereum's by 196%, and Solana's by a staggering 2,192%. However, while Solana is leading in on-chain adoption, Ethereum still dominates centralized exchange trading. The increase in derivatives trading indicates that institutional investors are playing a larger role in the market. While this is a sign of maturity, it also means that leverage-fueled price swings could be more intense than ever before. One key metric to watch is funding rates. These determine the interest rate paid between traders in perpetual futures contracts. Positive funding rates suggest a long bias, meaning traders are expecting prices to rise. Over the past year, funding rates for BTC, ETH, and SOL have all expanded, reinforcing the broadly bullish sentiment. However, as leverage builds up, the risk of sharp market corrections also increases. With increased leverage comes increased risk. If the market suddenly turns downward, liquidations could trigger cascading sell-offs, wiping out over-leveraged traders and causing sudden price drops. The report highlights a significant shift. Retail dominance in the crypto market is moving away from the US and toward the Asia-Pacific (APAC) region. Since early 2022, Bitcoin supply held by US retail investors has dropped by 5.7%, while APAC retail holdings have grown by 6.4%. Europe, meanwhile, remains stagnant. This shift comes after years of regulatory hostility toward crypto in the US, which drove many retail investors to the sidelines. While the new pro-crypto US government could change things, it's unclear if this trend can be reversed. The rise of APAC retail investors reflects broader trends in economic growth and digital asset adoption. Countries in this region have embraced fintech innovations more rapidly than their Western counterparts. Institutional investment may still be centered in the US, but the grassroots retail movement in APAC could shape the future of crypto's user base and transactional activity. With regulation in flux and new players entering the market, the balance of power between global regions remains uncertain. However, one thing is clear: crypto is no longer a US-dominated market. As 2025 picks up steam, we're in a strange place. Institutional adoption through ETFs signals market maturity, but the dominance of meme coins suggests that speculation is stronger than ever. Solana has outperformed Ethereum in multiple ways, but with meme coin mania fading, will it maintain its momentum? Meanwhile, a massive leverage buildup has made the market more volatile than ever. The crypto market cycles of boom and bust remain unpredictable. While a pro-crypto US government might help extend the bull market, history has shown that every cycle eventually turns. Leverage has always been a double-edged sword. While it fuels rapid price increases, it can also trigger devastating crashes. Traders should be aware of the risks that come with an over-leveraged market. Retail participation is shifting, with APAC taking the lead while US investors step back. This could shape how the market evolves, influencing liquidity, volatility, and adoption in different regions. Meme coin speculation may have been the defining trend of 2024, but whether it remains dominant in 2025 is uncertain. The market could shift toward more sustainable projects, or meme coins could continue to surprise us. As always, keeping a balanced portfolio and staying informed is the key to surviving in this unpredictable space. Market cycles can be brutal, but those who adapt tend to come out on top. The top might not be here yet, but it will come. Stay smart, stay cautious, and don't let FOMO dictate your moves. Another important consideration is the role of institutional investors. Their increasing presence in the market could introduce new levels of stability or create new risks, depending on macroeconomic conditions. If you enjoyed this deep dive into the crypto market, don't forget to hit that like button. It really helps out. Subscribe to the channel and turn on notifications so you're always up to date with the latest insights and trends. Let's keep the discussion going in the comments below. What are your thoughts on the market's direction? Are you bullish, bearish, or just along for the ride? The world of crypto never sleeps, and neither do the opportunities it presents. Whether you're an investor, a trader, or just a curious observer, Staying informed is the key to making the best decisions in this rapidly evolving space. As always, thank you for tuning in and being part of this incredible journey. Stay smart, stay safe, and keep exploring the possibilities of the blockchain revolution.